Hi again everyone, I hope you're all doing really well. It's been 2 eventful trading days for Exela Technologies since I last did an update on the stock. There was a bit of a swing movement through Monday's session in the lead up to the much anticipated release of June quarterly results. Those June quarter results were released early in Tuesday's session and were followed up by an earnings call. So in this video I want to digest all of the latest stock movements and earnings data and make an assessment on whether the short squeeze effort has totally capitulated or if there is still some hope for it. But before I do that, I just want to quickly mention my plans of turning my channel into a social enterprise going forward. I want to promote this now as I know that videos have a tendency of losing viewers partway through. But basically I want to encourage people to subscribe to the channel, as by doing so, once the channel does get monetized, viewers and subscribers will be helping to make a difference to some good causes simply by watching videos on YouTube rather than having to donate money. I honestly think this is a unique way to tackle a range of social issues and I'm excited by what can potentially come from this sort of initiative. So I encourage you to subscribe and be a part of all of that. Anyway, let's get into the Exela Technologies update. So I'm going to start off with talking about the results that Exela released. I think this is an important starting point as speculation around this was behind much of the turbulent stock movement in recent weeks. I think Exela did come out with some truly mixed results for the June quarter. I think a lot of attention is being given to the drop in overall revenue the company experienced, both when compared to the identical quarter of last financial year as well as the overall first half of last financial year. The company saw a 5% drop in revenue compared to this time last year and a 12% drop in revenue when comparing the two halves from this financial year to last financial year. So significant material drop-offs were experienced. I think it is important to realize that this first half of trading would be more negatively impacted than the first half of last year's trading due to the pandemic, and I think this is really showing up in the numbers for this financial release. While the business has had a decline in sales revenue, there was a strong turnaround in the profitability of the business, and I think this is a sign of the improved balance sheet that Exela Technologies has been striving for, particularly in terms of minimizing the level of debt the company held. They did this through a capital raising in the first half of the year, and it was in the most recent quarter that we get to see some of the impacts of this coming through. As a result, the company saw an increase in gross profitability of 27% compared to this quarter last year and a 9% improvement when compared to the first half of 2020. So this is reflective of the improvement of the debt to equity ratio, and it was something that was stressed during the investor call, and they expect further improvements for this to come in their future quarters. By minimizing borrowing expenses, it will mean that the company will see further improvements to their overall profitability. If the company can also recover and even grow their sales revenue beyond the pre-pandemic levels, it could mean a quicker return to profitability for the company in the near future. During the presentation, the company stressed its wide moat characteristics and how it is globally one of the market leaders in business process management. So it certainly has the capacity to further turn these numbers around. Despite its small market cap at the moment, it is a large company. They also stress just how much opportunity there is for the business, especially as it is now trying to grow its service offerings to the small business sector. So overall for the quarter, the company reported a 33-cent per share loss or $20 million, which was better than the market expectations from the one analyst that covers the stock, which had been predicting a 45-cent per share loss. So this is a good result and reflects how much of an impact of operating in such an over-leveraged state has had on the business. I wonder if the one analyst that covers the stock will change their $4 12-month price target on the back of these results. I would actually expect it to go a bit high. However, much of this is contingent on the company improving sales through gaining new customers and improving subscription renewal levels amongst their existing customer base going forward. So how has the release of these figures impacted trading activity and the overall short squeeze effort? To start with, let's explain the diagram we have on screen. So as of the close of trade on Friday, we have our red squares, which represent areas where there are currently short sellers who are in distressed positions. This included those that were caught out on Friday with the sharp price rise that was seen, and where the majority of most of the distressed sellers are from a few weeks ago, which I am calling the nucleus of the short squeeze effort. We also have the yellow territories, which potentially contain some short sellers who have not been able to exit their positions. Looking at the stock movements since Friday's trade, we can see that despite an initial rise in price on Monday, the downward trend has been a positive period for short sellers who have managed to get in on the trade in the last 2 days. Also, we can see that as of close on Tuesday, all of our most recent trapped short sellers have actually been able to get out of their positions. So what does this all mean? It means the new state of play for the short squeeze following Tuesday's trade looks a little bit like this. Basically, all of the recent distressed short positions have been able to move out of their positions. However, the nucleus of the short squeeze is still intact. What was a good sign for the short squeeze play is the upper limit of $2.85 did show resistance during yesterday's trade. The stock still has a small buffer for the short squeeze effort, as I believe that as long as the price does not significantly breach the $2.70 mark represented by the blue line, the short squeeze play is still in effect. Looking at the latest available short data from Fintel and MarketWatch, we can see an uptick in short volume activity during the last 2 days of trade. I'm not too fussed about this as the stock has been sliding and much of this would be short-term short trading. Two other signs that are interesting is that since Friday, the shorts borrow fee has increased from 9.02% to 9.35%, and the total overall percentage of XELA float being shorted has risen modestly to 37.65%, a figure that was only just 36% a week ago, and now puts it as the 5th most shorted stock, up from 6th position in the market. To me, what this means is that even though we are seeing a sliding in the stock price, that slide has a number of short sellers who are still in their position and could get caught out if the stock experiences another upward movement in our next day's trading session.
Whenever I'm about to do something, I think, would an idiot do that? And if they would, I do not do that thing.
So some final thoughts on Exela Technologies at this point in time. The company experienced some mixed results for the June quarter. The key highlights were obviously the improved balance sheet and the gross profit margins. However, this was counteracted by the reduction in overall revenue. There was a strong stress that there is a positive outlook for the company, especially when considered the decent moat that they have in their industry. With regard to the short squeeze effort, the number of short positions has grown despite a slide in the stock price. A quick reversal in this trend will put these new positions under pressure and generally overall grow the short squeeze effort. In another positive sign, the nucleus of the short squeeze remains intact, and we're seeing some resistance at the moment around the $2.85 mark. I honestly believe that the short squeeze remains in play as long as the price stays above the $2.70 mark. So this short squeeze setting is far from over. Anyway, what do you guys think? Will the stock price turn around and allow the short squeeze effort to continue its upward momentum? Also, do you think the June results are pointing to a sustained positive turnaround for the company? Let me know in the comments below. If you want to see more Exela Technologies or other stock related updates, I would encourage you to subscribe to the channel. Also, by doing so, as I pointed out at the start, you are helping to support the social enterprise initiative I'm aiming at transforming this channel into. Again, the concept of which is that by watching YouTube videos, people are helping to make a difference to some causes at no financial cost. So I encourage you to join up and be a part of that. Until next time, guys, may the markets trade in your favor. Cheers.